Well, good morning. Good morning. Thank you for joining us here on Co-working Live with Red Worldwide. We're excited for all of you guys who are here and those of you who are going to join us later. We're just really trying to provide the community with good information about business and getting you strategies and tips, but also solid information about what it is that you can do in business as you are growing. So it's tax season and everyone is asking. I love that terminology. Everyone is asking, what is it that we, should be paying attention to? Some of our small businesses do their own taxes, and because they do, they are, concerned that they're taking advantage of everything that's available to them in the tax code, and any new things that might be looming out there that they may not have heard about. Some people are watching and paying attention to tax professionals that are on YouTube. And so they're getting a lot of good information, but then sometimes things are getting missed. And so we are just going to go down our list and make sure that each person is familiar with what it is that you have that you can take advantage of. And don't forget that when we post these in YouTube, we post the notes so you can also get an opportunity to see just the highlights. And so if you miss any one of these, if you don't have a pencil or a pen or a tablet or your phone handy to write down these notes, please just, pop in the chat and let me know you'd like a copy. We'll, provide you with a copy in our community, but we'll also make sure that it's available online in YouTube in the description section, of the actual podcast. So the first thing that we want to talk about are startup costs. A lot of people opened up new businesses last year. It was your first year in business. You decided to start your business as an LLC or a corporation, and you are looking at what can I write off. So new businesses can deduct up to $5,000 in startup costs and an additional $5,000 in organizational costs, which gives you the grand total of $10,000, provided that the total startup costs do not exceed $50,000. So if your startup cost exceeds $50,000, then there's some carryover, and we can kind of talk about, what happen with that. And I'm going to do those things for you on Saturday at our Smarter Start boot camp, because we'll talk about just the types of things that people may have forgotten about when they were looking at their startup costs. And so if your startup costs exceeded $50,000, then we'll talk about what you can do. But what are the 15 tax deductible items that you can consider the write-offs for your LLC? And so let's kind of look at these. Home office. If you work from home, you can apply that deduction towards your taxes. It will allow you to claim expenses associated with the upkeep of your home office, including a portion of your home utilities, Wi-Fi, repairs, home insurance, and a standard deduction of $5 per square foot for the portion of your home office used for the business, or actual expenses based on a percentage of your home used for business can be claimed. So you want to be looking at this as a primo deduction, when you're talking about, your home in relationship to what it costs for you to run your company. So in addition to that $10,000 that we talked about as startup and organizational costs, you also have these home office deductions that you can take. Then you have your office supplies. A lot of people don't think about office supplies. They forget about the fact that office supplies are still a relevant tax deduction, because most people are doing everything in the computer. We've got the, Reduction in Paper Act even going into our homes. A lot of people send everything via email. And so, they don't think about home office supplies as much as they used to, because we don't print things as much. But, there are other things that you might think about all the equipment, tools, and supplies needed to run your business are deductible. And they include, your stationery. You still do need stationery, and people may not use it, as much, but there are times when you have to put something on your physical letterhead. So you might have stationery at your home. You might have business cards. You might also have a computer, printer, office desk, desk chairs, shelving, drawers, ink cartridges, thumb drives. A lot of people use thumb drives, business related subscriptions, and computer programs. This is one where people really can, stretch out because a lot of us are using a lot more software than we used before. We used to buy software once, put it on a computer, and we could use it. Now, almost all of the software that are used for many of the business tasks we have are used online. And that means that there is a subscription that is associated with it. And some of those subscriptions are a little pricey. So you might want to put those subscriptions, in some sort of a database or Excel spreadsheet so you can keep track of them and know exactly what you're spending. There are some subscriptions that you pay one price for the online access with your computer in the browser, and you pay another price for having access on your phone. So don't forget to make sure that you include the subscription price that you're paying across the board, not just what you're paying for online. Okay. And then there are still postage and packaging materials, stamps and things of that nature that people still have to pay for. Even if you're buying the stamps, USPS online, that's still an expense. So you might want to make sure that you're writing those things down. Cleaning supplies. This is one where people forget that the supplies that you use to clean your office, those are tax deductible. So please remember to put those on there. And a lot of what I see, and even in home offices, I see people with a Keurig and pods, for their coffee, and that's all a part of your, office setup. And so you serve people and you serve yourself coffee. So please don't forget that you can write that off. Those are a part of the things that you order, and some people are getting a little bit more savvy. They're paying for everything with their business credit card. And then, of course, the company is paying the business credit card off, but they forget to write it off. Okay, because they are not thinking about, the fact that that's a business credit card and those are expenses for the business. Now, travel expenses, you can deduct 100% of your business and travel expenses. These can include air travel, business lodging, meals, entertainment, parking fees, something that people they remember about the parking fees they pay going to the places when they're at home, but they forget about parking at the hotel when they're on a business trip. So please remember that all of those things are tax deductible. Car rentals, gas, the gas you put in the car when you rent the car. Yes, all of those things are tax deductible. And so the way that this is the test that you have to meet for travel expenses. If you are traveling somewhere for business, or if you've traveled and you're going to do business while you're traveling, okay, you might want to remember that it is when you stay overnight away from home that you're able to write things off. When you don't stay overnight, if you travel and in the same day you go back home, you lose some of the ability to write off certain things. Even if you go to a hotel, but if you don't stay overnight, then you don't have the ability to write that off. So make sure that you utilize the test and stay overnight if you're going to be writing that off, because you want to take advantage of all of your travel expenses. Okay. Phone and internet. I was sharing with a client over the weekend. We had a meeting and we were looking at her expenses and looking at what we needed to separate now that she's an LLC, the separation of certain things that were personal expenses before or things that she paid for personally, even though it was a business expense. And so we talked about phone and internet. You can write off your cell phone or landline use as long as you use your phone for business purposes. business. This can include everything from your monthly cell phone bill to the cost of a new cell phone. If you have to buy a new smartphone in order for you to do business, if it's in your, first year, you could even put that in your startup costs if it was buying the smartphone at the beginning so that you would have the smartphone to do business, then that smartphone could go in the startup costs. But it also could be in your revenue, that you're paying, I mean, your expenses that you're paying for in your business, even if it's not your first year. If your smartphone is failing or it's not going to be supported anymore, or you need a new feature that is only offered on the newer phones, then you have the ability to write that phone off. Okay. If you also need, and I want to tell you this because a lot of people are not thinking about how they use the internet. Unfortunately, sometimes if you're using your smartphone and you're using up data on your smartphone, the companies that are supporting your phones, they begin to do what's called throttling. That means that because you're using the data and you're sharing the data maybe with your computer or other devices, you've used more data than what, even though you have an unlimited plan, you used more data than what they really allow. And so, based on that, they will throttle your phone and it will get slower and slower. Your internet is going to be almost unusable. So, it may be beneficial for you to add a hotspot. And there are certain hotspots that you can get that may only be as much as $10 a month. Yes, you pay for the hotspot, but $10 a month could get you, unlimited use on those hotspots where you actually designate that hotspot for the business use. And it's only used when you're in a situation where you are utilizing your tablet or your computer so you don't run up the data on your phone where it's almost unusable when you really need it for things like, the maps, when you're traveling, because it's really not a good idea to run up all of the data on your phone if you use your phone to help you navigate. So it's important for you to be thinking about how can I, I may pay $10 more a month. And I may pay another, $60 to purchase the hotspot, but the $10 a month could make it so that it's easier for you to do business and save you time, when you're trying to get on or trying to navigate. So thinking about that is really important. Okay, business meals. Prior to 2021, business meals were capped at 50%. Then it changed in the pandemic years. For 2022, you could have deducted 100%. Unfortunately, though, the business rules in 2023, they reverted back to 50% deductibility. So please be aware that that 100% went away and you can only deduct 50%. So if you're doing taxes yourself, do not forget to make sure that you jot that down, that you are not able to deduct more than the 50% this year. All right, so we talked about that startup cost and how that works. I want to just add this little piece. If your startup costs exceed $50,000, the allowable deduction amount is reduced by that overage. Okay, so the deduction is eliminated if the cost exceeds $55,000 and you have to amortize it over 15 years. So we'll talk more about that on Saturday in our Smarter Start Bootcamp, but I just wanted to kind of throw that out there so people are like, okay, well, what does that really mean? You want to pay attention to the fact that, if you kind of gone over that $55,000 number, there is an amortization that you can do, but it's over 15 years. Okay. All right. Bad debt. This is something that you really want to pay attention to because bad debt, and if you are a sole proprietor, you could not write it off. It's not something that you could take advantage of as a sole prop. But if you are in business and you have filed an LLC and your vendor or customer has not paid their bill, if they didn't, pay because they went out of business, or if they just didn't pay, or if they've not responded to any attempt for them to pay off their balance, you can claim this as a deduction under bad and uncollected debt. That is an amazing thing for a person who's a business because there are a lot of people that struggled, a lot of businesses and individuals that struggle to pay their bills. And right now, even in our company. We have people who, for whatever reason, after the pandemic, they didn't do as well. And so they really could not afford to pay their bill. And so if you decide that you're going to write that off, make sure you're not still trying to collect it from them after you write it off. Once you write it off, it's gone. So you need to make sure that you're not one of those companies that's still sending out collection letters after you've written off the debt. Be honorable and make sure that if you've written it off, you've written it off. Okay. And most of the times, as with a credit card company or anyone else, they have a way of notifying you to let you know that they've charged off the debt. If they've been paid, they put it on your credit that the debt has been charged off. So if you are being um, compensated because it's a tax write-off, then do not let your clients know that that debt has been charged off. They need to be aware because they have to, if it's been charged off, they have to write it in as income on their tax return. I know a lot of you guys didn't know that, but if you've got a charge off, then it's income to you because the debt now is paid. That's the way the IRS looks at it. So if you are charging something off or writing something off and a client no longer owes the debt, please make sure you notify them so that they have that information and they can claim it as income on their tax return. No, it's not something that they probably would want to hear, but the bottom line is that they're now free of the debt and now they have to deal with, the IRS concerning it. If you're looking for a way to notify them properly, we have, some wonderful legal templates and, templates that will help you notify them appropriately. So if you'd like to get that template, please, don't forget to either reach out to us. You can put something in the chat or you can send us a message, in the community on our website or just as an email on our website. That's all fine, so that we can assist you. Or you can also send it to advisor@redworldwide.org, advisor@redworldwide.org, because that particular email takes information to assist people with, those kinds of documents. Okay, self-employment tax. Sole proprietors and LLCs with only one owner pay the full amount of self-employment tax, which is 12.4% for Social Security and 2.9% for Medicare, which is like a 15.3% total. So the IRS allows you to deduct half of the self-employment tax, which is 7.65% on your income taxes. Therefore, it reduces your tax liability. So you can write off half of your self-employment tax on your federal tax return. All right, legal and professional fees. If it's for a consultation or to draft a contract or to prevent or defend against lawsuit, your the legal fees can add up. And even if you're using Legal Shield, there's still a fee that you pay. So of course you're going to write out the subscription fee, but if there's additional fees that you pay for the work that they are doing for you, those fees that are related to the operation of your business are tax deductible. Okay. And the same applies to professional fees, including tax preparation fees. Those services fees that you pay are all tax deductible. All right, automobile expenses. If you use your vehicle for business purposes, you can deduct your auto expenses, including the miles driven. You can also count your vehicle as a business asset and deduct the depreciation value. And so it's important for you to understand that this is one really good way for you to get depreciation is by utilizing this particular tax deduction. Okay? Medical expenses. They're going up every year, and one way to save is by tallying up the cost of your medical plan, your co-pays, your deductibles, and any other fees related to medical needs, including medicines. Okay, so keep good records so that you can make sure that if you're ever audited, you can prove those expenses. But you want to make sure that you take advantage of that. So if your medical expenses add up more than 7.5% of your adjusted gross income, then you can't deduct anything over that amount. Okay. Anything over the 7.5 of your AGI. Okay. All right. Bank fees and interest. And I know it's a pain for you to have to go through and look at every fee in the, sometimes there are lots of fees depending on the banks that you use and the interest. But the interest payments and bank fees, they take a huge chunk out of your business revenues. We were looking at what we paid just in credit card processing fees and interest fees alone, in 2022, and it was a tremendous amount, that were there. And so if your business uses credit to finance purchase, the interest finance purchases, I'm sorry, the interest charges are fully tax deductible. And the same applies if you take out a loan to help fund your company. Those interest fees are tax deductible. Your advertising and promotions. If you started up your company and you printed the business cards this past year, or you took advantage of printing flyers or any other type of advertising campaign, all your expenses are tax deductible. In addition, the fees associated with maintaining and running your website, if you had to pay boosting fees for ads on Instagram, on Facebook, if you boosted anything on TikTok, sponsoring any kind of event to allow your name of your company to be put on their advertising. All of those are advertising costs for your goods and services, and they can be written off 100%. So make sure that anything that you did in advertising, and promotions, that you take advantage of that. Is this good? I mean, I want to make sure you guys are getting this. And if you think that, wow, this is a lot, I didn't even think about all these things, just by becoming an LLC that I could take advantage of. Retirement plan deductions. A SEP IRA is a new, well, I won't say new, but it's an ideal way for business owners to put away more money, in a retirement account and deduct the contribution from their taxable income. So I'm not a tax professional and I'm not a financial planner. I mean, I am a tax professional, but I'm not a financial planner. I don't know why I said that, but I am a tax professional, but not a financial planner, but I can tell you that, this is a very good way, and you might want to talk to your financial planner, talk to HR, talk to the right people that gets this set up for you if you're a W-2 employee. But if you are your own, I mean, you're the owner and you're the person that's handling everything for your business, then setting up the SEP IRA is an ideal way for you to put money away. Now, in a future session on a Monday, we're going to have some of our PFA professionals, the insurance professionals, to come and talk to us about other ways that we can take advantage of some of these wonderful insurance products to help us as we are planning for retirement, and even to help us with taxes as we're planning for our retirement. So that's going to be fun for you to be at that particular future Monday session. But let's talk about business entertainment. So showing your clients a good time can be part of your job, but I want you to understand that when you're showing them, this good time, that is, for the most part, a tax deductible expense, up to 50% of the related meals. And we want to make sure that, a lot of the entertainment expenses, are not really deductible since the Tax Cuts and Jobs Act of 2017. But the meals at 50% are still deductible. The travel, to a certain degree, as we talked about earlier, is still deductible. So you want to take advantage of those things if that you can take advantage of with regard to entertainment. All right. So let's kind of look at just a couple more things that I didn't necessarily mention. So the 1099 deductions, expenses related to hiring independent contractors are deductible. This can include a wide range of services from freelance work to professional consulting. And so you need to be aware that, every time you hire a contractor, you can write those things off if you are, making sure that you are keeping good records and you have things in, set up in a way that you are, completely um, tracking. You're making the payments and you've put some sort of agreement together so that you can see what those payments are. So small business owners or self-employed individuals also have 1099 deductions. And so when you pay the freelancer $1,500 for work on your website, the entire $1,500 is fully deductible. Okay, but you've got to send out that 1099 NEC if you pay a freelancer at least $600 during the tax year. So let's say you use the same person over and over for different services. Even though it's different services, you still have to send out the 1099 if it was over $600 that you paid them during the tax year. So anything above 600, when you hit that $600 number, every time now you have sent them out something, you're going to have to do a 1099 for the total amount of what it is that you paid them over $600. Okay. Now, the business owner can deduct the entire cost of hiring, and the freelancer can also deduct many of the same expenses as the business owner. So you send out the 1099 NEC, and the freelancer, they get the 1099 NEC, and now they can write off some of their expenses, the amount that it cost them to do the work for you. So that's pretty good for you to be thinking about that. Okay. All right. One of the things I want to go back to is I mentioned about, traveling and the fact that you need to stay overnight. Make sure that you're traveling out of town for business, okay? Because some people think that they can go stay in a hotel in their own city when they have, their home available. And that is kind of questionable as far as the IRS is concerned. So you want to make sure that it's these are out of town travel expenses, not expenses for staying at a hotel just because you needed, a rest. Okay, you want to, make sure you're taking advantage of what it is that you are supposed to be taking advantage of. What the IRS says is deductible when you're away from the city where you normally do business. Okay. All right. So gifts, any amount up to $25 per person. Gifts for clients, customers, employees, they're deductible. So some of you guys know that we have the Red Business Exchange, and you can go to the Red Business Exchange and buy all types of things. And I suggested to a couple of people that they bought those tickets on the Red Business Exchange for movies and give them away to clients, because those movie tickets are less than $25 each, and you can buy those and give them away to clients for Christmas or at other times. They can even be promotional items, where you put them in with some postcards or something about your company to just, encourage the self promotions, or I should say the promotions for clients to, talk about the services that you offer with others. Pins, calendars, they don't count unless they're over $4. So make sure that if you are going to use those types of promotional items, that you're, spending a little bit more than $4 if you want to write it off. Okay. All right. Education. 100% of the educational costs that you have, as a small business owner, actually qualifies for a tax break. So some of the valid educational expenses are workshops, seminars, publication subscriptions, books, and classes. And let me say this, when some of you all have purchased the classes and the courses from our organization that are designed for businesses, those particular classes are completely 100% tax deductible. So you can write off the courses that you take with Red Worldwide because our courses are designed for business owners and we curate an experience that is specifically for you. Okay. All right, so um, I want to tell you what the standard mileage rate is for 2024. The rate is 67 cents per mile. So if were thinking about that when I said it earlier, what is the, that you could write off your mileage, but I didn't necessarily tell you what the mileage rate was. It's 67%. I mean, 67 cents. I'm sorry, not percent. 67 cents per mile. So if you use your personal vehicle to drive like 5,000 miles for the business, your deduction would be $3,350. Okay. All right. Or $5,000 times 67 cents. All right. So that's how you 5,000 miles, I'm sorry, times 67 cents. That's how you get the numbers. Please excuse my inability to translate that. But yes, it's 67 cents times the 5,000 miles is what will get you that $3,350. That's a lot, and so it really does make sense for you to take advantage of the mileage, guys. Okay, if you're using the bus or you're using the train and you have paid for passes or you're paying daily or whatever that is, those are write-offs for you. So you need to be paying attention to, keeping up with what those expenses were. Because if you're, an LLC and you're taking advantage of this, you want to make sure you take full advantage of it, while you can. Okay. So, any business related taxes you pay are tax deductible. This includes taxes you pay for payroll, okay, such as Social Security and Medicare taxes. Other examples are your state tax and local income tax, sales tax for business purchases, and real estate tax for business property. Those are 100% deductible on your federal taxes. Okay, so be thinking about that. Childcare, 0%. Unfortunately, you cannot write off any childcare for your business expenses. So make sure that you are aware that, that may have been something that you were thinking about. Oh, I can write off my childcare. Unfortunately, you don't have that ability if you're 1099, if you are an LLC. However, if you are working in a position where your company is paying you and childcare is being provided, okay, then the employer, the company, does get a tax credit if they meet certain requirements. So you can talk to me about that later, and I can tell you what that requirement is. And we can talk a little bit about that on Saturday when we come. Tax credits allow you to deduct a dollar for dollar amount on your tax return to reduce the income tax you owe. So there are some tax credits that you could take advantage of there. Okay. But the employer must ensure that child care providers have to meet the state license requirement. So it can't be that you go get grandma who doesn't have any licensing and have her watch your child and then try to use the tax credits to write that off. It's not going to work. Okay, just saying. All right. Charitable contributions. This is huge. It's generally 60% of the donation that you make. So there are other tax breaks for small businesses that make charitable contributions. And so we want to talk about some of those. So some of you guys who didn't, get the full amount, from previous years, you might, depending on how much you gave, you might want to consider an amendment for previous years because, there are um, some things like, the concept of a small business owner deducting 100% of a charitable contribution if it was on their personal taxes. If you ran a sole proprietorship, a partnership, or if you have a pass-through entity, you can take advantage of that 100% charitable contribution. All right. And then up to up to 25% of the contribution is deductible if the business operates as a corporation. Okay. So that's something that you might want to be thinking about. That 100% deduction is available depending on the type of LLC you are. All right. Okay. So marketing and advertising, we talked about, that a little bit, but we just want to make sure that you are keeping good records of all your expenses. Sometimes when you pay for boosting things online, you don't, document it or screenshot the payment. So you got to make sure you have receipts, invoices, and screenshots to verify your costs. So please make sure that you're keeping up with all of that. Now, if you're not using your home and you're renting out a space, okay, you might want to take advantage of the rent payments for your business property, such as the storage, even that you might be using, or warehouse space. They're tax deductible, and if you agree to buy the property at some point, you can't deduct the rent payments. But if you are just renting at a co-space or a co-working space or some other type of space, and you have a storage, all of that is tax deductible. And so we have that in our business where we have a separate storage, because when we downsized our businesses where we didn't have 7 offices anymore, we didn't have a place to store a lot of things. And so we're paying $150 a month just for the storage, in addition to the amount we pay for the business office and conference room that we use. And I want to share with you that if you're doing something similar, please don't forget to write off the storage, okay? Because that's a part of your expenses. All right. And if you have repairs and things that you're making to your space, or if did any kind of adjustments to the space to accommodate what you're doing, if you expanded and you added things, please make sure you are writing that off, because that is a part. If you paid for it and the company that you're renting from did not pay for it, then you get to write it off on your taxes. Okay. All right, one other thing. I know I talked about subscriptions, but some of you guys may forget. Don't forget this. Please, please, please. You don't forget your cloud storage. A lot of the times you're writing off the subscriptions and you forget about iCloud and, OneDrive and, what's the other one? Box, some of these other Android related storages, and even Microsoft related storages, Amazon, NAS, all of those are cloud storages, and you can write them off 100%. So don't just think about the project management tools that you use or the databases or this AI or that AI. Please think also about your cloud storage and any accounting software that you're using to keep track of what it is that you're doing. Those are really important for you to make sure you're writing those off. Okay. All right. So if your business has a revenue of less than 27 million, that's where you can write off the 100% of the interest. We talked about interest already, but I need to throw that number out there so that you understand that you can, if you're 27 million or less, you can deduct 100% of the interest. So, make sure you're looking at those credit cards, because a lot of people are using credit cards for their businesses, and they, are not necessarily keeping track of the interest, that they're paying. So you can write off 100% of that interest. Okay. Now, let me see if there's anything else that I missed. Oh, business insurance. A lot of people don't realize that their business insurance premiums are 100% deductible. This includes all types of insurance you may need to run your business. So that could be your workman's comp, as well as your general liability, professional liability, errors and omissions policies. All of those are 100% deductible. So please make sure you're writing those off. Okay. All right. Well, this has been, a wonderful time of sharing with you about, what it is that you guys can take advantage of. I promised, several people that I would do this, at the beginning of tax time. And so for those of you that were, um, taking advantage of things last year and you didn't know what you could do this year, you now know. And yes, write off for last year tax paid. Yes, I see that, Tony. I see Anadina, a lot of great info. There's so much more than we think, right? You don't really realize that by just becoming, an LLC or corporation, the kinds of things that you do for yourself that when you were a W-2 or you were running as a sole prop, you just couldn't take advantage of all of those things. So we want you to be able to do business better, work smarter, not harder. And as you are beginning to do that, we want to make sure that we're here to support you. So if you have any questions, please don't forget that you can post those questions in our community. You can also put them in, our email. If it's a question that you need an answer to, you could send it to advisor@redworldwide.org. That's a different email than my email, okay? Please don't send your questions to admin because admin gets over, I don't know, we get about 100 to 200 emails, sometimes a day, and it would be really a long time before you might get an answer, like 48 hours, whereas by sending it to advisor, the answers get to you a lot quicker. So, and if you are already in your portal, you have a portal with us, you can also pop your questions in the portal and get answers even quicker than that because we're answering throughout the day, to questions that are asked in the portal. Several people are checking those questions. So if you are, a part of Red Worldwide, you're a member of Red Worldwide, use your portal because the portal gets you answers quickly. You can text message us as well there, and we will get those messages also throughout the day. Several people get them. Well, thank you so much for joining us here on Co-working Live with Red Worldwide. We look forward to being with you tomorrow as we talk about legacy. It's our, time to talk about legacy. If you show up right at 7 o'clock and you have a question or something that you want to put forth, we start answering those questions and serving clients right at 7 a.m. in co-working because we go live right at about 7:15 Pacific Standard Time. So we want to make sure that you know that if you're coming to co-working to get a question answered or you have something specific that you want to talk about, please pop in at 7 o'clock because that could also influence what we're going to talk about for the day when we go live. If there's something that you have and we really believe that it's something that will benefit everyone else, we'll shift our agenda to meet that, that responsibility that we have to help people. So please be, mindful of that. And for those of you that, are going to be here tomorrow, just know that we'll be talking about all things trust, legacy, succession planning, anything related to that. We're going to talk about it tomorrow. That's the plan. All right. Well, we'll see you again. And thank you again for coming.